Hello. Thank you for tuning in. I am Brother Juan. I am a certified Christian business coach and consultant, tax strategist for entrepreneurs, and a strategic partner to help you build synergy in your business with bookkeeping. I empower service-based providers, CEOs, Christian entrepreneurs, what I call them, to pursue their purpose, monetize their passion, and plan their profits. So welcome to this live with myself. It's a good day in the neighborhood. Um, Today is Monday, January 23rd, 2023. Wow, how time flies. My dad always said, once you start getting older, the time just starts to fly by. And you know what? As often as he is, he was right with this as well. So definitely feel time is flying by. Actually, looking at my own life, personal life, this is going to be my 30th, right? 30th year, 30th high school graduation reunion is supposed to be this summer. And so, wow, 30 years. If that don't make you feel old. So I wanted to hop on because today is the first official day that e-file season is open for the IRS. So it kind of launches e-file season for the 2023 tax season. There's so much that kind of popped on my mind before I jumped on live as I was trying to decide what I was going to talk about. I can talk about a lot. As I mentioned before, being a Baptist preacher, I can be long-winded. So, we'll try to condense it down to make it more digestible, whatever I choose to talk about, because I'm still debating on it. Just kind of this past week, I've been getting a lot of people reaching out concerning daycares. Little known fact, I looked at daycares as a possible niche when I started bookkeeping. And so I think it's interesting, funny in a way, that I would get a lot of daycares reaching out now. So I'm actually excited about that, as I've been even considering it in the past month or so, if it was something that I wanted to, dive into. But I love, again, working with entrepreneurs, and daycares are very unique in that, those who operate daycares tend to like kids, right? And so, yeah, definitely shaping the future for tomorrow. And so don't look at that lightly. And if you happen to be one, I may be talking about you. I may be talking about somebody else. You never really know. But yeah, I think that's very interesting of what I've been seeing over the past week or so. But it is great. So making sure I can see everything that's going on, checking my tech stuff, making sure everything is operating right. So kicking off e-file season. So for you entrepreneurs, you small business owners, whether you're a sole proprietor, whether you're a single member LLC, or really just anything else as far as looking at expenses. um Oftentimes when people think about business returns, or when people reach out to me about business returns, they are Schedule C filers. And Schedule C is actually related to your personal 1040. And so a lot of time, and that is a business, that is a valid business. But when we think of business returns, often we're thinking of partnerships, S corps, C corps, things like that. But when you first start your business, one of the first things you're told to do, or one of the first things to do, is to get your LLC. And I talk about LLCs all the time. I'm not going to go into that a lot right now, just to make a very brief point. Um, if you are interested in learning more about LLCs, you can visit brotherjuan.me, my coaching website. and click on programs, and there is a LLC course on there available. It goes into depth. Um, Although it's about starting an LLC, if you have an LLC, it's going to be good education for you as well. So oftentimes people think that that automatically, does something for them, but an LLC is a state designation. So state designation for legal protection of your personal assets, limited liability. Your liability as far as business transactions is limited to the assets of that LLC, assuming that you're operating the LLC as it is to be intended to operate as a separate entity from yourself. So one of the things that can pierce the corporate veil, and piercing the corporate veil has to do with not only those business assets being at stake, but piercing the corporate veil has to do with reaching past that corporate veil to your personal assets. And that can happen when you are not operating your LLC as a separate legal entity. So what I see a lot of times is people getting an LLC and then they're operating all their business stuff from their personal bank account. And that is a good way to pierce the corporate veil, right? And so if you have an LLC, your LLC needs its own bank account. And you need to pay business expenses out of that bank account. You need to deposit business sales, business revenue into that business bank account. And then what you take out for personal use needs to go to your personal account from that business account. Owner's draw, right, is what it's called. But from a tax standpoint, the designation for the IRS for a single member LLC is going to default to what is called a disregarded entity. And a disregarded entity, to make it simple, means that that LLC has not elected to be treated like a corporation, whether S Corp, C Corp, or what have you. And as a disregarded entity, as far as taxes are concerned, there is no difference between a sole proprietor and a single member LLC. Hey, good to see you, Brother Ronald. Thank you for tuning in. And so there's going to be no difference. And so when people come to me about business returns, that's one of the first things that I have to determine is, do they actually need a business return, or are they going to be a Schedule C filer on their personal 1040? Nothing wrong with where you are in your particular life cycle of your business or your particular tax situation. Nothing wrong with either or. You just are where you are. And that has to be determined so that we can proceed in the correct fashion. So I want to look at some of the common tax deductions for sole proprietors. And I say it like that, but technically these are going to be expenses on your Schedule C, because that's primarily who I deal with, are single member LLCs. So advertising costs. Advertising costs has to do with the purchase or placement of ads, social media marketing campaigns. It could be your business logo, printing brochures, cards, anything that you use to promote your business. So one of the common things that people like to try to use is uniforms. Right, this is a common business deduction that many business owners try to use. But you have to understand with uniforms, if it can be used outside of your business, then you can't necessarily take a business expense for it. But however, I got Brother Juan Biz Coach. I have my polo on for that. But it can be used as a marketing expense once you place your logo on it, right? And so this, in the year that I purchased it, which was last year, I think, was a business expense, but it wasn't expensed as a uniform. It was expensed as marketing, because there's something written on the back too. It says Biz Coach, right? And I have other shirts that's got stuff written all over it, like a walking marquee. And I'm a big guy, so I'm a big marquee. So with this particular shirt, this was a marketing expense in my business because I placed the logo on it for the purpose of business, right? So whenever you purchase insurance for your business, thinking for myself, I don't have a physical location. I am virtual, but yet I still have professional liability insurance. If you have a physical location, your insurance may encompass more general business insurance because you want to protect your physical asset of where you meet clients, where you meet customers, and that is a concern. Okay, common business deduction, business use of your car. So even if you are a single member LLC, you can use your personal vehicle for business expenses, and this is again part of your Schedule C information. So I had one tax client. She's been with me a few years. I'm not going to say her name, but she has a situation where she got into sales. And so she would travel to people's houses and not knowing at the time that that should be something that she was concerned about. She contacted me a few weeks ago, told me about the new position that she had for most of last year. And as we began to talk, I asked her about mileage. And so good thing that she has a way to track all those miles that she drove all over a city. And she lives in a big city. And she was commuting to potential clients' homes 5 to 6 days a week, and so that's a lot of miles that are going to enable her to reduce her taxable income for that business that she had got involved with because she was an independent contractor. And so as an independent contractor, 1090, she's going to receive a 1099, and that makes her self-employed as far as that business is concerned. But that mileage that she accumulated is going to help reduce her taxable income. And so a lot of times we don't think about that, like event planners. Even myself, even though I operate a virtual business, whenever I meet with a client somewhere outside of my home office, that travel, those miles that I utilize are tracked. And that becomes, again, a reduction of my taxable income through Next Step Financial Partners or my DBA, Next Step Bookkeeping and Tax. Okay. So another common expense, especially for those that I deal with, are coaches, consultants, course creators. One thing that we do is we purchase continual education, whether it is, and I'm not necessarily speaking about school, but coaching programs, right? So whether you're a business owner who is not a coach, and especially if you're a coach, then whenever you purchase a course, right, whenever you become part of a coaching program, that is a business expense because the purpose of that class, that webinar, that seminar, workshop is to add value to your business and increase your expertise, and that makes it a deductible expense. So even as you consider right after this live purchasing that How to Start an LLC program or mini course that I was speaking about from brotherjuan.me, I'm putting it back out there, from brotherjuan.me, when you purchase that and you have a business, right? You should, because that's what it's about. Then that becomes a business expense, right? And it reduces your taxable income as a result. All right. And so if you have a physical location and you pay rent, or even if you're virtual and you rent a co-working space, right? If you have a virtual office, that becomes a business expense as well. All right. And so I'm big on virtual businesses. Something like, oh gosh, I can't remember the statistic, but I want to say 50% of most businesses are operated out of the home. And so as a result, we have the home office expense. The home office expense, where a portion of our home is used for business purpose. Now, there are certain limitations and requirements involved with that. I'm not going to get into that. I just want you to know that it is available. And so there is a standard way to calculate that particular expense based upon how many square feet. There's a limit on how many square feet of your home And there is a certain amount, I think it's $5 per square foot, that is a deductible expense that, again, reduces your taxable income. And the other method is looking at actual expenses, both direct expenses and indirect expenses. So direct expenses for my office would be like my office phone, because it is strictly a business phone. It has its own separate number. That's a direct business expense. I guess that wouldn't necessarily apply for the home office, so because it's written directly off of regular expenses. But indirect expenses would be things associated with the home itself, right? So you have, depending on where you are in the country, electricity, natural gas, sewer, garbage, homeowners insurance, or renters insurance if you rent, because you don't have to own your home to take a home office expense. If you pay someone to cut your yard, mow your yard on a regular basis, that's part of the upkeep of the home, and it could be a deductible expense, right? And so definitely talk to your tax professional about what all you should consider as being connected to that home office expense. So now let me talk about some of the common mistakes that sole proprietors make. One of the biggest mistakes that we make as sole proprietors is not being aware or not paying estimated quarterly taxes. Now, this comes in handy because at the end of the year, when it's time to reconcile our tax situation, the United States tax system is set up to be a pay-as-you-go. And so when you work for somebody else, they take that federal withholding out. They take that Social Security out. They take that Medicare out, right? And so being self-employed, as an entrepreneur, a small business owner, you are responsible for taking it out throughout the year and remitting a payment to the IRS for that. And so at the end of the year, when it's time to reconcile everything, depending on your tax situation and everything that you got going on, you could end up owing a penalty for not paying estimated quarterly taxes, right? And so by not doing it, it could cost you more money. And that money is not deductible, right? It's just, you're going to have to take that hit. Underreporting income, right? So when we receive that cash, and I've met a lot of entrepreneurs who feel like if they get cash, they don't have to report it. But the IRS wants you to report any income that you receive, whether it be cash, check, credit card, barter. Right. I made a post the other week about, when your clients, your customers start paying you in eggs, that's still reportable taxable income, right? Because you bartered your services for those eggs, and those eggs have a value, and you are required to report that value. Right. And the price of eggs are continuing to creep up. So we got to be careful, right? I haven't had anybody pay me in eggs yet, but an omelet sounds good right now. All right. So incorrectly deducting business gifts. There's a lot that can be said about this. There is a limit on how much you can deduct for as far as a gift. Really understanding what that gift is and the implications could determine how you categorize it. So I don't want to get into any particular situation and mention names, but some things are done as far as a marketing tactic, and it could be written off as far as marketing rather than actual gifts. Depends on how you promote it. Depends on how you set it up. And I'll just leave it at that because I can't get too into it without talking about particular situations. Choosing the wrong entity. Choosing the wrong entity is another mistake that we make. So I would say typically, once you get to a point where you are profiting, your net income is $45,000 to $50,000 a year, it's time for you to begin looking at perhaps making an S corp election. And I said perhaps, but because the compliance is going to be a lot stricter with the S corp than a disregarded entity, that single member LLC that we talked about initially. You're going to have to make sure things are in place, right? So and that begins with bookkeeping. Again, I've said it before, bookkeeping is the foundation for your financial future as an entrepreneur. If your bookkeeping is not in place, I promise you it's costing you, right? And so when you look at the long run, especially if you are in a business and you're profitable and your profits are increasing, your revenue is increasing year after year, and you're making money and you are not taking care of bookkeeping, you're leaving money on the table. You're wasting money, right? Because that bookkeeping becomes the foundation for your financial future as an entrepreneur, right? You can't really talk about saving on taxes if you're not doing your bookkeeping. You can't really talk about looking at your income and your expenses if you're not doing your bookkeeping. You can't analyze data from bookkeeping if the bookkeeping does not exist, right? Somehow, I don't know how I did this, and I think if you're on LinkedIn, you don't see this. If you're on YouTube, you won't see this. But for those of you on Facebook, somehow I set up an automatic chat message whenever I start a live video. It says, book a free session with me to analyze your financial statements. Once you book a time, I will email you so that you send your financial statements ahead of time. And there is a link to do so. Now, because it's posted, I will honor that, but I'm not intending on doing that, right? But I definitely believe that I have a gift, talent to read and interpret data. I love looking at financial statements, and it tells me a lot about your business. It really does. It tells me a lot about your business. Okay. So I don't want to continue. I want to look at some more things. Record keeping requirements. You know, even with bookkeeping, you need to keep a file, preferably a digital file, in multiple places of your receipts every month so that you have your source documents in the event that you get audited, right? And so that's good to do. If you have not gotten a copy of my tax deduction toolkit and checklist, I would encourage you to visit the website. Next step, bktax.com, next step, bktax.com. I believe that's going to still be on the the first page of our website. And for those of you who are on social media sites where it will let me send a message, I did add that link directly to that. And that's what I've been reading off of, talking about business deductions. Not everything else, but talking about business deductions. I've been reading from little bits and pieces of that. The full thing is 7 pages long. There's a checklist with various things that you would need to file your taxes on one page, and then a lot of information there, some of which I've been reading. So that is definitely free from me to you. And for those of you who don't know, I'm on a mission to help one entrepreneurs along in their journey in 2023. I would love for you to be one. If you're watching this video later and you have any questions, feel free to type those in the chat. I will see that and I will get back with you as soon as possible. If I don't answer you directly, you may give me another topic to do a live. And again, I'm Brother Juan. I pray that you have a good day and get ready to file those taxes.